Hey, 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 Tim Knight, and it is another great day for charting. Markets just acting terrific. Very pleased with all that's going on. But today started off kind of in the red, and it put up a little bit of a fight. The bulls got a little feisty, pushed things into green, and that's kind of fallen to pieces. So we're pure red again, my favorite color, and we're in the month of September, my favorite month, heading to my favorite season, autumn. A lot of favorites going on right now, and the charts are just working spectacularly. I've got them preloaded, so let's jump in and wallow around in my charts. Check out this cute little top right here. What I've put this semicircle in pink. That's our top. And this is a daily chart, so we slipped below it hard yesterday and pushed back up to resistance today. That's the peak of that daily bar you see there. But as you can see, we're near the day's lows. And the next big test is right there on the spider. 544.96. That's the gap. Now, as we saw with the cubes, the market can shrug its shoulders and walk right past the gap. The big event this week, of course, is the jobs report on Friday. Basil's hunch is that it's going to be a big miss. Over the course of time, I mean, there's no doubt that the good people at the Federal Reserve will cut rates and cut rates and cut rates and cut rates, and it'll slowly dawn on folks that they're doing this not to help out mom, pa, kettle, but instead because the economy is in a tailspin and they will do anything to try to prop it up again, and it ain't working. So get used to lots of rate cuts coming and lots more QE, and they'll print the dollar into toilet paper, etc. But the jobs report, I imagine, will be a big miss, which will get people high-fiving about 50 basis point cut, as if that's going to make any difference at all. It could be 1,000-point rate cut, go negative, and it won't make any difference. It's a lost cause. Don't even worry about it. That's the big thing coming, and that may provide a reason for us to respect the gap. We'll see. Here's the cubes. As I said, they cut right through their gap. It's not a particularly good resistance level, but I've just left it there for the heck of it. And weirdly, today it actually acted like resistance. That we sliced through the gap yesterday and pushed right back up to it. So who knows? Maybe it does have some sort of meaning there. But that blue line there, we'll just use that 465.11 as resistance. And we've just been sinking slowly, slowly, slowly away. For once, I'm not going to show NVIDIA today, but I can tell you they've got battered down. They've lost about $1 trillion and more in shareholder value. Jensen Huang dumped his stock, but the innocent shareholders, they're still holding theirs, watching it wither away. It's pretty much at major support right now. So maybe it'll bounce, provide some hope, like a slope of, and on its way down. It could be a single-digit stock in a couple of years. Absolutely possible. Seems ridiculous, but it's absolutely possible. Or at least worth a lot less. Because in Tesla, if you had said late in 2021, they're going to lose, over half their value a few years from now, people would laugh and laugh and laugh. And that's exactly what happened. Their heyday is years past. They peaked in November 2021, and they are currently at around half that value now. And that's after a lot of lifting, too. Yeah, these things aren't necessarily sustainable. SMH, of course, has led the way down, particularly yesterday. I scurried out of a number of positions right away this morning that had fat profits on them, like XME, although if I'd done nothing, it probably would have been just fine. But we had a big fall yesterday, the biggest we've had in a long time. So I did take profits here and there and got into some different positions. So I'm actually pretty heavily, I'm so short I could jump off a nickel right now, but I switched some things. My own great rotation. EFA is a favorite of mine and my biggest position. This is continuing to slip. It too pushed up toward its resistance like so, but as you can see, there's plenty of opportunity for downward movement here. I really intend to make the most of this month. So there we have it. A couple of we talk from time to time about, the big fish that got away, et cetera. A week or two ago, I spoke at length about, it was either Dollar General or Dollar Tree, one of them, because I've spoken on both of them again and again and again, not only because of their charts, but also because of this narrative that I'm putting forth, which is companies that cater to the lower middle class are in for big trouble because the lower middle class basically has been given nothing but inflation by the government, and it's going to get worse and worse and worse for them. So your Wendy's and your Denny's and your Dollar Generals and your Dollar Trees and whatever else is not going to do well. And so we're seeing these just get blasted to smithereens. Here's DG. This is the big victim du jour. Because they actually, forgive me, this was the one I talked about initially. The debacle here was on the 29th of August. So last month, it plunged, and it's been adding to those losses, as it were, since then. So we have moved from, over $250 a share to about a third, less than a third of that level. It's about a 70% drop, because it wasn't that long ago. This was NVIDIA. This was Home Depot. This was Procter & Gamble. Successful, growing, can't miss. And I am certain, without even looking, that every analyst had a strong buy on it. Analysts don't do sells. Analysts don't, and God knows they don't say short anything. They are part of the investment bank, and they're there to do one thing: push, push, push the stock. So everybody was a strong buy on this one. And then it went bye-bye like so, collapsing like so. After it bottoms, they'll have a seller, maybe one or two of them will put a hold or something, or underweight. That's the worst they do. It's like the Ally McBeal of ratings. So they're going to underweight them. But when it's peaking, they're all going to be strong buys. And the retail guys just hold the bag and watch it collapse. So 70% loss here. Dollar Tree is the wipeout today. Down today alone, about 25%. And, when DG had their debacle, they fell. Dollar Tree did, in sympathy, but they got a lot worse. I shall not be reviewing the puts I used to own on these things, because God knows how many hundreds of percent they've gone up. But another victory for charting, and this is a great victory for these fellows here, because we've talked about it many times. And absolutely catastrophic wipeout. This move from like 180 down to 60. So again, a 2/3 wipeout in a very short amount of time. So yeah, DG, Dollar Tree, ouch. Now here's a weird one. This is not a financial instrument. It's not something you can trade. It's just data. And it makes an important point, which is this is a chart of the number of job postings for software development jobs. And it's pretty interesting here, because it peaked around February of 2022. You can see here with very steady growth through 2020, 2021, and into 2022, just very, very steady growth. Since then, an absolute reversal. And it brings to mind a couple of things. One, I think the jobs market is in trouble, but two, more importantly, I've said this over and over again, and this is coming from a guy who's been mixed up with computers since 1979. I went online in 1981 with my 300 baud Lynx modem. I live in the Silicon Valley. I've grown and sold high-tech businesses. I'm surrounded by all this. So I'm a Mr. Nerdo. Having said all that, I think anybody sending their kid off to get a CS degree is bonkers, unless they are clearly ingenious and go to either don't go to school at all, which I recommend, or go to like a Stanford or a Caltech or, Carnegie Mellon, something like that. Because people are chasing what used to be. You got a young person in your life, you want to have a good future? Terrific. Plumbing, electrical, laying pipes, anything physical, old school, trade school stuff. And mind you, I can't change the oil in a car, so I'm not speaking from experience here, but I'm speaking as an amateur historian and a person who just tries to notice things. The people who can do things with their hands and who can deal with things that are physical and so forth, they will never go hungry. They're going to do terrific. Learn to work at a utility plant, electrical utility plant. You'll do fantastic. People looking around for coding jobs, God help you. It's going to be dull, and it's going to be hard to find work. So Mr. Computer Guy says that. Avoid computers. Yuck. All right, TLT, bonds, doing great. My old shtick. Bullish bonds, bullish precious metals. Bearish is going to be on stocks. Bonds are recovering nicely. So TLT's up 1.18% today. So go bonds, go. Oil is not doing nicely. Oil's down again, almost 2%, which is great, because we've got some really nice bearish plays going on in the energy world here. Here's my honey. Cleveland Cliffs down again, almost 1%, and getting tantalizingly close to a failure of this massive top right here. Oh boy, oh boy, boy. Won't that be something? So that's looking really good on CLF. Schlumberger, SLB, down 1.8%, also getting very close to a failure of, actually it already has broken, slipped below this low. We're basically the same price now that we were almost 2 years ago. So that's nice. So yeah, energy's looking good on the down low. I'm going to give iWire a second chance. I sort of grumbled my way out of it yesterday morning, but I'm going to give it another shot. We've got a shooting star pattern here. I'm going to keep it on a tight leash. 100.73 is the high for the day. Anything higher than that, I'll be out again, but we'll give it another try. Just a few existing positions that I just want to share briefly in the time we've got. Amazon, 176.80, stop on that one. ARM, I shaved off a third of this morning, but I'm going to keep the rest on a tight leash to 123.79. Coinbase, get rid of half this position today. It kept going down, but the remaining 169.06 is the stop on that. And we've got plenty of room to roam down here on the downside. Donkey Kong here, DraftKings DKNG, stalled out right here. Nice tight stop right there at the dashed line. Let's hide the arc so we can get a figure here. 35.26, I've got a stop on that one. General Motors, it's working out. Finally behaving itself a little bit. 49.86 on that. Looking for plenty of room to the downside on this one. Now here's an odd one. I wrote a whole post about this. Huntsman, thinly traded. You've probably never heard of it. I love this chart. And I've got puts on this, hold your breath, January 2026, 499 days from now. But the time premium is just about zilch. And I'm just crazy about this chart. Shopify, this one also turning away from its resistance. It put up a good fight, but then down it goes. Yay. And last one of these, UPS, not very exciting. You know, it's a brown box. What are you going to do? But we've got some downside potential right here with our ally of a staggering amount of overhead supply.